Hey everybody, happy Friday. Chris Magnon, your lender for all over Colorado. Of course, coming to you with my Friday market update. Just got done reading a super nerdy economic article. And in that article, there was a statement by Lawrence Yun, which he's the chief economist for the National Association of Realtors. And he said he thinks that interest rates have finally hit their peak and are going to start doing a downward trajectory into the fall. Lawrence, I hope you're right, because it has been a little bit too painful for a little bit longer than most people would have expected, with rates going higher than most people would have expected. But what Lawrence is saying actually makes a lot of sense, because if you look at the inflation data, we've really been making some nice headway. So, inflation report comes out yesterday. Inflation is continuing to cool and actually cooled at a rate better than what the market expected. We haven't seen a big improvement in interest rates yet from that, but what the Federal Reserve is looking at is specifically core inflation in the service sector, and which is basically a lot of the inflation, the core inflation that strips out shelter costs. And that inflation has gone from near 10% down to actually below 2% right now. So that kind of opens the door for the Federal Reserve to kind of pivot on their stance on interest rates and potentially start setting up for an environment with lower mortgage and interest rates across the board. So, Lawrence, I hope you're right. And other news is listings just aren't coming, right? And I've talked about this in the past, where we've had a record low new listings coming to the market this year, and we continue to operate that way. And what is a little bit concerning is I'm wondering if we actually hit our inventory peak, because our inventory growth usually continues from the beginning of the year and usually peaks out in the fall. But we're starting to see that inventory growth stall. So hopefully it's just because of these high rates over the last month that's caused that inventory to stall, and that we do see our normal seasonal increase of inventory for the fall, because most of the time the fall is the best time for a buyer to buy, because there's usually the most inventory available and the least amount of buyer activity, seasonally adjusted. So, fingers crossed, we have a normal fall and we're not in such a tight inventory situation. But still, inventory is quite a bit below now where we were last year, so we're just not seeing that inventory increase like we normally do. So that's my market update. If you liked it, click like. If you have questions about financing a home, please give me a call, let me know, and have an awesome Friday.